but just to recap, who are we? We are a digital lending platform. If you ask us, we go by the brand name Kissht. Kissht is installment in Hindi. If I were to just put it in simple terms, what have we developed over the last 8 years? We have created a platform that makes it easy for the customers to come, go through a journey. That journey may take anywhere from 5 to 10 minutes. And in that journey, in a very simple, dignified manner, they are able to share information. We are able to gather additional information about the customer. And at the end of the journey, we are able to make a very prudent call on whether the customer is credit-worthy or not. And if he is credit-worthy, we are able to disburse the loan on the spot. And this platform has therefore created a convenience proposition which has enabled us to be at a place, as I will talk later, to have 11 million unique borrowers we have served today. I'll go in detail, but if I were to say, as I say, lending, giving money is easy. If you ask us, the two important fulcrums on the back of which we have been successful. The first one is risk management. We are a lending company. Ultimately, risk management decides success or failure. And I talk about how our tech-driven, machine learning-based proprietary underwriting models, back to automated triggers, and a very, very strong focus on collections on the back of automated collection system has helped us manage risk through the cycle for the last 8 years. Also, to talk about a little bit about our acquisition strategy. We are a company which has a very diverse acquisition strategy, multiple acquisition channels, and with every passing, I would say, months and years, the brand recall of Kissht is increasing, which helps us, increase the organic acquisition, which, as you may recall, will ultimately lower the acquisition cost and make the unit economics far more resilient for the sake of the company. We are back. I think the last thing I would say at the bottom, we have a very balanced liability strategy. We have our own NBFC, which funds 50% of the loans, and the remaining 50% of the loans is what we call as off balance sheet, where we partner with larger NBFCs and banks to make the loans for our customers, and I'll talk more about it.
I have a few questions. One is, what should be your share in digital lending in India? Do I ask you questions first, or one by?
Either way is fine. You can ask all the questions.
And my second question is, what is the APR like in rate of interest, processing fee? Isn't it slightly higher than the physical lending process? Also, what is your user base, and how do you take care of the data privacy and confidentiality, safety of the data? And my last question is, what is the ticket size of each loan? What is the profile of your customer, general profile? What are they using this loan for? Are the sapnas becoming too heavy for them, or what is the picture? And what is the default rate?
Okay, let me address the first question. See, from a digital lending share perspective, it's the number that I will struggle to give, to be very honest. As I said, our AUM is 5,956 crore, and if I can just compare to one of the largest players in the market, say a Bajaj, which is, let's say, 4 lakh crore, some part of that will be digital lending. So to get that number accurately for all large players as well as for all the unlisted players is going to be very difficult. Needless to say, it's a number which will not be significant, and therefore just avoid as a great opportunity to grow. I would say more than share of digital lending, the way we see it from a growth opportunity standpoint, the shift from traditional way of lending to the digital way of lending, and that shift is quite real. I think that's what we shared in the industry report in the RFP, and that shift for companies like us, which are built on digital platform, will just make it easier to adapt and address the opportunity than say a very traditional approach. But to give a number on market share is very difficult for us. I think the second question that you asked is on the yield and APR side. I think some of the numbers are there in the RFP. Our average yield is close to about 30%, 31%. I won't get into the subjective discussion on high or low. I will leave that discussion, I will leave that judgment to you. I think the way we look at it, number one, we have to be fully compliant, and that is something we do. We are a regulated body. Our NBFCs, our partners are regulated. So we work within the realm of what is allowed under regulation. I think the other way we look at it, so if I see from a customer perspective, if it is high or low, see, we are a branch-based company, we don't have a salesperson. You may be receiving, we all receive thousands of calls, we are available there. Our customers don't receive anything. Not a single outgoing call goes from our company. So if they accept us, they see a value proposition, and the way at least we've been able to address it, why he still takes us. See, the average tenure of our, I think you answer some of the digital questions, is 13 months. For a smaller ticket size loan, say 30,000 rupees of that kind of ticket size, just mathematically speaking, the difference between, say, if I give a loan at 30%, say, and give it at 22%, just hypothetically speaking, if you just do the math, the EMI quantum will be 100 rupees or 200 rupees more. So the quantum is less, right? So while mathematically the yield looks larger, the absolute payout, that too spread over say 12-13 months, makes it reasonable, and it's something they find it worthwhile from our customer survey than going to a branch, talking, perhaps wasting a few days, etc., etc. But that's just, I'm talking from a customer perspective. I won't get into the way we think about it. See, our endeavor is to continue to reduce the rates. The RFP mentioned some numbers before and later. We are some of our strategy going forward is to improve cost of funding. The A- will help. We talk about how do I leverage, how do I operationally leverage the large indirect cost that I'm carrying today, with scale that will come. So it's a journey for us, and that journey will continue to do that. But from a customer standpoint, the proposition is convenient, and for a smaller ticket size, is willing to pay that price for the sake of convenience. So that's the second question. I think the third question is user base. I already mentioned it's 11 million of the customers we serve. 11 million. If I talk about the total user base, also mentioned in the RFP, it's 63 million. So that's a unique user base that we're talking about. And from a profile perspective, I think go back to that page again. At the bottom, you see are the use cases, right? So 47% of the use cases are actually for business purposes. They are typically small ticket size working capital needs. If you are a small business owner, you are inventory maybe having maybe a 1 lakh inventory. If you want to top it up with a 20,000-30,000 inventory, that's what you would use it. 29% is actually consumption. These are your standard consumption, it could be mobile, CD, whatever the standard consumption. Also, it could be services consumption, right? Travel or whatever. And 13.46 are what we call as emergency, which is defined as typically education or medical reasons. So this is the use case. To answer your question, are we the last resort kind of a thing? The answer is no. But the biggest estimate of that man is that the average CIBIL score of our customers is 7.6. So these are customers who are otherwise credit worthy. So they generally see a value proposition with us, and that's why they come to us. Yeah. I think there was one more question on data.
Data, yes.
Yeah. I'll be very honest, it's one of the topics that as an organization keeps us awake. We do manage a lot of the customer data. Before I talk about what we do, let me again say there are two, or rather, there has always been a regulation, but with DPDP Act and the digital lending guidelines that RBI first issued 3 years back, there are significantly high levels of safeguard that the regulator has put in and the government of India has put in. We are entirely compliant on that. But I think it goes beyond compliance. I think it's not a letter of compliance, it's also the spirit. There's a constant endeavor to ensure robustness of our infrastructure. I can separately take you through what are the steps we take. I don't think I can, there are a lot of them non-public, but I can separately discuss with you, all the anti-hacking, etc., all the steps we take. But it is definitely a very, very important focus for the company. In fact, among the large technology team that we carry, there's a significant part of that team which is focused entirely on technology security.
Just to add, all the data that we capture as part of the application process is entirely consent-driven architecture. So the customer is fully aware of what data we will use, at the time of underwriting when we are doing the loan for the
under the new act you are supposed to do that.
Yes,
We were always
yes.
supposed to do under the new DPDP Act. We are
But the only thing I will say is the digital lending guideline of RBI preceded DPDP Act,
Even that.
and many of the steps were already applicable to us even before this act came into